The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start out the show today with the British pound. That's the one that seems to be in the news quite a bit this morning because we've taken out the lows of 2009. There are rumors that Great Britain is going to close up shop on Friday and come back and rename themselves Greciaonia. So I don't know if that's going to be true or not, but at least that's what the rumor says. Folks, we've just taken out that low, and as you can see from this chart from Jim Bartolioni, our good friend at V Capital, V50 Partners, you can see that the last time we took one of those lows out, we had a tremendous rally. We have the euro trading down around the 109 and change level today. And remember that 109.40 is that long-term trend line that we have that we're looking at this. So don't write this off as yet. Now, I'm going to cover a couple of things about cycles today because we've had some questions about cycle theory and all this stuff. And boy, I'm far from an expert, but I do have some experience with it over the past years, and we will go into that in just a little bit. But the first chart that I wanted to go in today is, I think, the thing that's controlling the market today, and that is this is the British. Let's try it again, Larry. It's the 30-year Treasury bond that we looked at yesterday. It was making a 78% retracement. This is when the market was trading up around the 1935, 1936 level in the S&P, which was near the high of that last move. And then, of course, risk off came on, and then the market rallied very, very strongly. You'll be able to see that in the next chart, because if we watch it really closely, you'll notice here, let's just get it because it's rallying. I've got it in two sections here, so I want to be able to make sure that you walk through what I'm trying to show you today, because I've been, bearish stocks for quite a while here, this last few days anyway, because of the full moon that we had. But I think we're getting ready for a little bit of a bounce. That's what it looks like to me. So we do have a really nice ABCD structure in the Treasury bonds that measures up into the 168.06 level. We're trading at 167 and change right now, and I believe that we've got a chance for that to happen because we're so close to it. It would be very easy for that to happen, today without, virtually any trouble at all. So we want to be watching this very closely, folks. The important numbers to watch today from the S&P standpoint, and if we take a look at this, I want to bring it up just so we can see, some of the things that we look at each day here, so that we can see what we're looking at. I have some interesting things on wheat also, but frankly, what I wanted to do today was to talk a little bit about the stocks before we open here, because that's the one that's going to be the big daddy rabbit for most of you who's watching it. But as you can see here, let me get this put up here, and then we'll be able to see it. You don't see it until I put it in the room, and let's put it in right now. Okay, here's what's happened since in the middle of February. You can see the big ABCD structure. We took out the high of February 1st. Just the other day under the full moon when we got up to that 1943 level. That was a perfect ABCD move, as you can see by the dark blue lines. And now what we're looking at is we're looking at a market that's most probably going to come down and touch the 382 retracement of the move that we had from 1804. Now, this is going to be a very important spot to look at. So far today, we've been down to 1897, but watch 1890, folks, because if we go start cascading down below that, and that's going to put the Dow down probably close to 300 if we do that, you'll be looking at something really, really nasty. But if we hold that 1890 level, this could be a very good, very good spot where the market might hold, and then we could have, some type of a rally. But we've come down from 1942, down to 1897. If you'll remember when we spoke yesterday on the show here, we were talking about the importance of 1912, and that was the 1.618 expansion of that previous move. And once we went through that, that's what told us that we were most probably going down lower, and that gives us this price now that we're watching, which is 1890 is what I'm looking at in the S&P. Below 1890, there's trouble in River City, because this thing could really cascade to the downside without any trouble at all. That's just the way that it looks like. Now, I wanted to get into cycle theory here a little bit. This is going to take a little bit of a segment here, but this is a trade that we're looking at today that we've just implemented here. Whether it's going to work or not, I don't know, but we're going to take a look at crude oil. And as the Saudis said today, we've got tremendous amounts of bearishness out there, but no one's cutting production. What we're looking at now, yesterday the market held at the 61% retracement there at that 31.85 for about 4 or 5 hours, and then it just literally started to sell off. And now we've come down and we've made a 61% retracement of the whole move from the low that we made way back on February the 11th. So what this means now is that we have a lot of cyclical components and price components coming together at the same time. If you'll notice on the bottom of this chart, you'll see the 3 cycles that are there. Those are nothing more than, this is an hourly chart, so that's a 65-hour chart, or a cycle, a 131 cycle, and then you add those two together and you get 196. So it's a very symmetrical cycle. This is what they talk about is periodicity. These, in other words, the periods are equal as they come up. That's part of the work of James Hurst in his book, The Profit Magic of Stock Transaction Timing. However, folks, I started my cycle theory with that in 1970. That's when I first met John Hill up in San Francisco. Walt Bressert was there from Hal Commodity Cycles. Everybody got into cycles because of that book. It's really amazing. In fact, I'm looking here at the front of my desk here, and I've got my original copy of the James Hurst book. I paid $8.95 for it, and that was a lot of money back in 1970. But anyway, this is what we're looking at. However, in the book itself, a lot of those cycle things that he had, they don't work very well, and the reason why is the markets are not static; they expand and contract. By these numbers that we look at, if they were static, everybody would see them, and that's not the case. But what we have right now is we've got a market that has a pattern, which is a Gartley pattern, and in the crude oil sitting right there at 30.69 in the April crude, and that's pretty much where it should hold. Whether it does that or not, I don't know. But it should get a rally off of this, because if you notice the other times that we had these 65-hour cycles, these things just backed off, took off and rallied quite a bit. Okay, we're going to take a little break, and I'll get back, and I want to go over the 3 most important things out of that James Hurst book.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're talking about cycles and some of the work from James Hurst from the Profit Magic of Stock Transaction Timing from the 1970s, 1972 era. Actually, I had the good fortune of being his stockbroker when I was at Drexel Burnham. He lived up in the Grass Valley, Nevada City area of California, and he was a fisherman. He basically had been an engineer at Lockheed Martin, as I recall. I think he put one trade on in the 3 years that I had the account. He really wasn't interested in trading too much, but he still had some good ideas. When the book came out in 1970, I believe was the first time that the book was published, could have been 70, 71. It came out exactly at the same time that William Garrett's book came out, Torque Analysis of Stock Market Cycles. Garrett's book cost $29.95, which was 3 times the cost of Hurst's book at $8.95. And so, Garrett only sold 200 copies. They destroyed over 5,000 copies of those books. Mrs. Garrett told me this back in 1990 when I had her come to Pismo Beach to visit us. Bryce Gilmore was there, and we wanted to know more about her husband. Let's get to the markets. I know you don't want to hear this history stuff, but I posted the chart of the gold market in here because we were talking about this potential breakout of this triangle yesterday. And as you can see, once we broke above the 1229 level, we had broken what they call a valid trend line. Now, what Hurst did and how he defined a valid trend line, it was a trend line that was connected by at least 2 highs or at least 2 lows. You can see the lower one that was the boundary of the pennant that we were looking at. That is also a valid trend line because you can see it hits several different times, and that's what you really need to do. Now, to really do a valid trend line correctly, you should draw those points off of Fibonacci retracements, because that's the ideal, mathematical things of what makes the market go up and down. So if you have a 78% retracement line and then a 61% retracement line, that gives you your valid trend line, and that's what you're looking at. If you have any interest in this, you should get his book. I'm sure it's available out there, but it's called The Profit Magic of Stock Transaction Timing by James Hurst. And that explains some of that. However, some of the cycle stuff in there just does not cut the mustard anymore, folks. It did maybe back in the the 60s and 70s when there was virtually no volatility in some of this stuff. But with the volatility that we have now and the huge volume, some of the cycle tenets that he talked about, like summation and periodicity, some of these things have been skewed so much that it's really difficult, to make heads or tails of it. However, there's some good things in the book. FLDs, which are the future lines of demarcation, a way to, determine where prices should extend to. But frankly, I don't think it works as well as just the simple, ABCD structure that we're looking at. So as we're watching gold here today, you can see right now we're reaching the price level that we had marked here for today. That's up around the 1250 level, 1249, 1250. I believe we've been up to 1247 so far today in the April gold. And if we pop above that, look out, because if we close anywhere above 1250 to 1255, we are probably going to make new highs. And all we've looked at here is a 2-day or 3-day correction after that market ran $130. And boy, that is a really bullish sign. From if you're a bull in gold and silver, that's one of the more bullish things that you can possibly come up with. So you want to keep an eye on that very, very closely, because it's going to be really interesting if the market can actually do that. So that's an important thing to keep an eye on. Now, by the same token, silver has been following gold, but it's been a lot weaker. And as you can see, we talked about just this the other day, is that we made a beautiful ABCD pattern in the silver market, and gold couldn't even make a retracement. I mean, that was what was the amazing thing. And now, the silver's getting up into this $15 and 60 cent level. And if we get above that, then we've got a chance for some more movement to the upside. But the overall scenario for gold and silver still looks bearish to me, and I'm not just using that neural network thing from Larry Edelson. I'm just looking at the patterns. We had that 61% retracement from the high in 2014. But ladies and gentlemen, if we take out 1265, that old high that we made just last week, that is extremely bullish in my opinion, because it had every reason in the world to go down. We've had the counter trend rally here that Gartley says be ready to sell, and whether that's going to be the case or not today, we'll have to wait and see. But if gold gets above that 1270 level, oh my goodness, that's going to set up some price objectives up there that are going to be quite high, I would think. So we'll have to, and that would probably mean there would be risk on again, and then the bonds are going to be rallying quite a bit, and the risk off, and then bonds would be rallying quite a bit, and then we would be looking at the stock market selling off even more. But as we come into early this morning, we've got the S&Ps down quite a bit. It's down, I think, about 15 or 16, trading at 1899. The key point there that we want to watch, of course, I've mentioned, is 1890. That's the 382 retracement of the whole low from way back on February the 11th. And if that is the case, we're not going to go much below that if the market is truly going to be bullish. We've had just a normal correction after that full moon occurred on Monday when we were up around that 1940 level, and so we're down 40 handles. If you remember, in fact, we're down, I believe, exactly 46 handles, which was exactly twice as much as the last corrections that we had. If you remember, we were looking at these corrections of 23 to 24 points in the S&P, and then what happened was the fact that we went twice that, and we said that I said that if it went below, and all I'm doing is looking at numbers here, folks. That's all because the market repeats itself, over and over again, and you certainly don't want to get too involved with the mathematics of it. Just keep it as simple as possible. But 2 times 23 is 46, and that's what we've come down from the high at the 1950. That's where we are right now. I believe we're still got a chance to make that 1890 level, which is the 382. So that's the one that I would really be watching very, very closely without any stretch of the imagination. So please keep that in mind. And remember, it's just a number. We don't have any attachments to it because sometimes they work, sometimes they don't. That's the bottom line. Now I have to switch over. I've had several requests about the wheat market. We've talked about this a few months, well, not a few months ago, just a few days ago when we had Rich Anderson from Anderson Capital Management on, and Rich was saying that looks like that we were going to be heading down into new low ground in wheat very, very shortly. We've done that today, and I wanted to bring this up and just to show you the pattern because we've got a real potential coming up here, folks, and we'll be taking a look at that in just a minute.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And the flag is up and down the stretch they come. The stock market is now opening. We're going to see how much lower we go, but let's keep an eye at 1890 on the S&P. We're going to take a quick look now at, since we looked at wheat on the longer term basis, what I like to do is I go down to usually a 4-hour chart because that allows me to look at several weeks. And as you can see here, we have a beautiful 3-drive pattern setting up here in the wheat. And that comes in about another 15 cents lower, so we're going to be watching that extremely closely. Folks, this is the 24th of February, which is not a big surprise to anybody, but remember, in 2 weeks, we are going to come up to a very big lunar event because we have the eclipse occurring at the new moon, and believe me, if any commodity works with the lunar things, it is certainly the wheat. If you read Andrew Lowe's book on the evolution of technical analysis, he spends the first 50 pages of that book talking about the astrological implications of technical analysis, because the Babylonians and the Sumerians, going back 5,000 and 7,000 BC, were planting wheat based on where the planet Mercury was. They still have tablets that show this, so it was very interesting that, you know, they were, and folks, I was not trading back in those days. I didn't start until I met Moses back in the early part of the 1st century. So anyway, we want to watch this wheat about another 20 cents lower, and we'll see if that's going to line up. We got plenty of time, and we are going to have Rich Anderson on next week to go over. I tried to get our good friend Arch Crawford on the show for today, but he was rather busy. I'm going to try to have him on tomorrow or possibly Friday. We're going to be having dinner with Arch tonight, so hopefully we'll be able to convince him to come on the show either Thursday or Friday. Okay, now someone's asked a question about LinkedIn. I don't have the time to do that right now, but I will put it up just a little bit later. I wanted to cover a few of these other markets that look, really interesting, from a cyclical standpoint. But, we got to keep an eye on these because you have to prepare yourself ahead of time, because that's what we're looking at, in the wheat and some of these things, to get to the spot where you want to be able to look at these things. So I'm just trying to give you a rough idea of the things that I'm watching for the coming day. And of course the Treasury bond one is the one that has got a very good, and I want to do the notes because that is another one that is very interesting, and it'll just take me a second to put it up, and then we'll be ready to go. I hope we'll be ready to go. Maybe not. We'll see. It doesn't look like it's going to make it this time. Boy, I just got too many of these things in here. We're going to find it eventually. It's coming. There it is. Hold on. I found it. Shut the front door and raise the rent. Don't give up on me yet, folks. I still got a little life in the old puppy here. Okay, now we're going to be looking at the Treasury note. This is the largest of all the commodities things we trade, has the biggest open interest, the largest volume, but hasn't the great volatility. But when you look at the Treasury notes here, going back to that big shooting star pattern that we had back on the weekly charts, this is our first really symmetrical ABCD pattern that we have, and it's coming into this expansion level, as you can see up there at that 1.618 level. Now we hit that earlier today, and it's going to be interesting because if we get a lot of selling in stocks, the people are going to take off the risk or put the risk back on, and what they do is they don't buy stocks supposedly, and there's where they buy the Treasury bonds and Treasury notes. But I'm just looking at the patterns. I'm just saying that this is going to be one that's going to be really, really interesting to watch. And it's coming at a time where we've got a potential bottom coming in stocks. We got a potential top coming in notes and bonds. And we also have a potential top in the gold at this 1148, 1149 level. We're trading at 1140. 11. Let's try it again, Larry. 12.49, and we're trading around 12.45 right now. So we'll be able to see. Someone's asked me what I think the best trade for 2016 is. Well, if it's the best trade for 2016 was done on January 1st or the first week in January when the market topped, we're started down. That I think that was the best one. The second best one would most probably be, selling Treasury bonds up around that 171 level. And if you miss that, I would certainly look at them here at the 168 level. The problem is, you might have to risk 2 full points in the bonds if that's the case. But that's what it. If you've ever seen anything like that. So, but the pattern is there. It's a Gartley pattern on the hourly chart that's retracing, and so that's what you're supposed to be, looking at what's going on. So anyway, I hope that helps, but we'll wait and see. I'll have the price or the chart for LinkedIn later on when we come back after the larger break. We've made new lows now in the S&P. We're getting close. We're only about 7 points away now from the level that we're looking at, which is 1890. Also, the Treasury bonds that I'm looking at, that number is 168.06, and we've had a high so far this morning of 168.03. That's very, very close. Our high on the gold so far this morning is 1246.70, and that number, that 786 number, comes in at 1249. So that's within $2 of where that is, where it should be, and that's very, very close. So you have to wait to look at it. Now, the number in the crude oil that we were looking at, that number came in at 30.69, and we're now trading at 30.64. So we have made a newer low in the morning off of crude oil than what we've done before, but that's neither here nor there. We'll have to see if the market's going to hold that up. I wanted to make one correction, and that was yesterday when we were talking about the weakness in the market that was going on. I mentioned the German DAX, and what I was referring to about the lower DAX position was not the longer term. I was just talking about what was happening on the day yesterday itself, and I didn't make myself clear because 2 people dropped me emails correcting me, and I knew what I had said. At least I thought I did. I listened to it again, and what I forgot to mention was it was for that day, not over a period of 2 weeks or 3 weeks or anything like that. So I'm going to make some mistakes in here, and when I do catch them, I want to be able to come out and let everybody know that that is a correction of what we're looking at. So we have a real interesting opening so far today with the Dow down a couple hundred points, and it's nothing anymore for the Dow to swing 100 points at a time. We're having tremendous volatility, which is not to be unexpected given the factors that are occurring in the market with zero interest rates and all the other things that are going on. So we'll just watch that as it unfolds. One other question someone asked me about the price of Tesla. Tesla's been under a great deal of pressure recently. Someone mentioned it's going to be down again today, and let's see what happens. I don't know. Oh, it's doing very little. It's down hardly anything. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we've posted the chart of LinkedIn into the Tiger's Den so you can take a look at it. You can see here that LinkedIn, when we gap down with that huge gap, we made a beautiful 1.27 expansion of the previous swing and also a perfect 78.6% retracement of the previous low. We've had a pretty good rally since that time, so the market is actually holding up relatively well, given the fact that you'd had this huge gap down. It hasn't filled the gap or anything like that, but it's at least the pattern was there, and it held up what we think is pretty closely to what we wanted. Now, we've had a question here about one of the most famous stocks in the world that is under the gun right now because of the federales are after them, and that is Apple Computer. And I guess it's more than Apple Computer, it's Apple everything now. But what we're looking at here is right now we're trading down at around 94 and change. We have a lot of support around 92 in this. Now, this market hasn't rallied very much, given what some of the rallies that we've had in the S&P and the Dow Jones. You can imagine we had tremendous rallies in those. We did not do that in Apple. You have to ask yourself the question, folks. This is probably this stock gets more free advertising than anything, and they have 180 billion in cash sitting offshore, so they don't have to pay taxes on it. So what do? They borrow money at near 0%, probably 2 or 3%. I don't know what they pay, and they write that off as an expense. Do we live in a great country or what? I don't know. However, there is a chance, and if you can look at this ABCD structure here in Apple, a case could be made easily to see Apple trading at about $85 a share. If we break that 92 level, that's what the next thing would be. However, if you look at the little cycle structure since late January, and I don't have the 4-hour chart on this, but if you looked at it, you would see that we should have some really good support much near right where we opened today at around 94. So anything below, if we start trading below 93.5 or something, then I would think that you would be looking at something, far more sinister. But it still has a chance in here. It's holding on to its life by fingernail. Well, it's not its life, but it's holding on to the support by fingernails. Folks, it's really hard to believe that we're talking about Apple here. I mean, everybody owns this stock. I mean, it's just amazing what they've done to it. And, they did this before. They took it from, if you remember, it went from 385 at one time, all the way down, dropped over 50% a year or so ago with that ABCD structure. And we could be looking at that again also. So just remember that the patterns are what will lead you to the promised land, folks. The rest of the stuff is just the things that they use in the market to looking at. Okay, well now I hear my, here we go. We're hitting our price level here in Treasury bonds now. So that means we're heading lower in stocks, which is exactly right. And we're also getting very, very close to the level here in the gold market. We've now made a new high at 1247.40. Remember, we want to watch 1249 very, very closely because that's going to be the interesting spot. Just a lot of things happening today for potential trades based on pattern recognition. And I was chatting today with Bart, and one of the things that we said was we better wait because, with 5 or 6 things coming together, and all of them will be contrary to each other. In other words, long oil versus, short gold and things like that. So you have to be really careful what we're doing. And so the way to handle that is just to wait a half an hour or an hour after these numbers are met. And you might not get the high, but you might be able to get into position at a less risk than if you try to come in and just sell gold at 1249, which is not a bad idea, but you've got to risk about $7 or $8 from that point, which is certainly acceptable in a contract that's trading at $125,000, because that's what 100 ounces of gold is going to run you. So that's pretty it. Now on the wonderful front, guess what? I've lost data. Shut the front door and raise the rent. What do I do now? All right, nothing I can do, so I'll just have to wait and see that everything's working out okay. I hope everything in the radio show is going all right. Would someone let me know that they can hear me okay? Because I'm afraid that I'm out of business here. I don't know. Looks like I am. Looks like I'm okay. So we're seeing. Don't have any data, but I got an internet connection. I don't understand that. What's going on? Not to worry. Okay. All right, this is what we're watching here. I'm showing the S&P trading at 1893. I don't know how close that is as to where we really are, but we'll see if that's going to hold up or not. I don't know why this thing freezes up, and we'll be able to see what's going on. But right now, I just can't do anything other than, I'll do like Hillary Clinton and just wing it. That's for sure. The Japanese yen is breaking down. Below major support. Looks like we're going to hit that 110 level, which is where we had the big breakout from 2014. So we'll see if that's going to be the case. We got a break coming up here pretty soon, and then we're almost finished with the show, so it should get through all right. But anyway, this is what we've got. This first hour is going to be really interesting, folks, because we got all of these things happening. Keep an eye on 1890. I don't know if we've hit that yet in the S&P, but that's a really key level. And if we go smashing through that, 4 or 5 points, that tells you that 382 is broken, and then you're looking at something that is, certainly, a lot less. I can see we got down to 8. I just came up. We just hit at 1249 in the gold, and we've got the bonds are jumped up above the 07 level. And so we're going to see what happens with this, but we're really close to this number in the S&P, folks. It's a big number. Remember how important the 1942 was. This is just as important on the downside because it's going to be really, really interesting. It takes a while for all this selling to commence or finish up, but watch it closely because we are in an area where it's going to be tricky. and you don't want to risk very much. So that's the secret to these markets, is try not to risk any more than you absolutely have to, and you'll be far better off than if you just throw out something and just do a flying Walinda on one of these things. Okay, now let me see. We got just a few minutes to go before the next commercial. The pound is still, going down. We've had some support around the 140 level, but I think we're going to be looking at much lower levels than that. In fact, my data on that is gone too. So this is not good, but we'll see. I'm showing the 1891 so far has been our low in the S&P, and remember 1890 is the number we want to watch. That's the key number. Whether that's going to be the number that does anything or not, we'll have to wait and see. I want to post that up here just to give you an idea of what we're looking at when we're watching this, because it's an important spot. Let's get this back up here, and we should be okay here, and then we'll post it, and then we'll be all right. Okay. Oh, right, there's our break. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls, we are sitting at the proverbial moment of truth here in the S&P at the 38% retracement level. This is equal to a double the previous corrections that we've had, almost exactly. And so if you're going to be looking at a buyer down in here, make sure you put a stop in, give it a reasonable stop. I would think 5 points would be as reasonable as you could possibly ask for given these market conditions, but so far it has held. But remember, these things might only hold for a few minutes or even less. The same thing is true as crude oil. That 3069 level is very important. We're trading at 30.77 now in April crude. So the quality here is the risk that you have to take. Now, the fact that we're down so sharply in stocks, it's probably smarter to let this level prove itself and then let it rally and then buy the first 61% retracement. Let it rally up to 91 or 1901 and then buy the retracement back or something like that if you don't want to try to just step in here and buy it at the 1890 level, which you would have a loss in it right now because we're just going down to 1889. So if you did buy it there, for heaven's sakes, put a stop in at 5 points. That way it's not going to change very much, change your lifestyle too much, but we'll see if this level is going to hold or not. Now, the other one that we're watching, of course, is the crude oil and then also the Treasury bonds. Treasury bonds will be a little bit more volatile because of the risk-off thing, and that's what we're watching when we look at some of these things early this morning. But the main thing here is make sure that you protect yourself because these patterns, they do not work all the time. The best that you're going to get is probably, 75 or 80% of the time. And that's a pretty good, but don't forget the other 20% can really hurt you bad. Remember the words of Roy Longstreet, the first mistake teaches, but the second mistake kills. And the first mistake is that if you buy it and you don't put the stop in, and that's the one that'll kill you. So make sure that you do it. However, we're trading at 1891.50 now, so you can take profits and stop ragging on me. Who loves you? Live every day in an attitude of gratitude and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.